Hi everyone, welcome to the Beggin Investor channel for a new tutorial video. Today I want to share something that I found very interesting. So I read Stan Weinstein book about techniques to win in the stock market, and I discovered what's called sector analysis. So what's sector analysis? Well, a sector in whatever it is, stocks or cryptocurrency for example, is a group of, let's say, stock related to one field only. So for example, the index I'm watching there is the real estate stocks in the US. We can take a look at another sector, which would be materials select. Sorry for my English. This one is communication service. Another one would be financial. So for example, this index shows the performance of the financial stocks in absolute. And why would you use that? It's simply to outperform the reference index. So you would know the reference index of the stock market is the SPY. This is the S&P 500 price. It tracks the price movement of the S&P 500. And if you want to outperform the S&P 500, you need to choose the assets that are outperforming it. And one way to do that is to look at sectors to see which sector is the strongest compared to the S&P 500. It means that it has a stronger momentum, that this sector has a market anomaly of what we call momentum anomaly. And if you want to invest, you would rather much invest in something that has strong momentum than something that has low momentum. It's been backtested. If you're interested into seeing the proofs, you can research momentum investing on Google, and you will see all the research that has been done to prove that investing in sectors that have momentum gets you to having a better performance than someone who just owns the SPY. So, for example, we're gonna review every index and show which one is outperforming the S&P 500 and which one is not. So let's print, you click on the compare and you print the SPY, which is the S&P 500 ETF. You can see that during the bubble, the real estate sector really outperformed the S&P 500 right there. You can see that this is the S&P, and above the price chart is the real estate prices. And after the real estate crashed, but if you were able to get out before the market crash, you would have made a ton of money. And you can see that we're gonna print the low from the 2008 crisis. You can see that since 2008, the real estate outperformed a little bit, but right now it's not really interesting to invest. There are things that are really obvious that I want to show you. You can see that the materials sector is really being outperformed by the S&P. This is what this is the REIT. This is materials communication service. Same, really not really interesting. Wow, look at that. Look at the energy sector, how it's being destroyed. So if you had invested into the energy sector, you would have been outperforming the S&P 500 by a crazy amount. If you invested from the beginning, of course, that's going to be different. But the trend of the energy sector is weaker than the trend of the S&P 500. So you don't want to be into that. This is the financials. Financials are following the S&P 500. This is industrial. And look at that. Look at technology. How crazy technology is outperforming the S&P 500. It's no secret for anyone that the technology stocks are destroying the S&P 500 and that they are outperforming like crazy. So if you had invested in tech, you would have outperformed the S&P 500. Look at that. The S&P 500 from 2008 rose 275, while the tech sector rose 680. So that makes sense. And how do you see an outperforming sector? Well, you saw the outperforming sector from there. You can see that the price line of the technology sector was above. So when you see a consolidation and you can see that it's starting to boom, you're telling yourself, well, I'm going to invest rather than buying the SPY, I'm gonna buy the technology sector, because the volatility you can see is the same. The downtrends are absolutely correlated, but the uptrends is stronger on this one. So why not take the bet that has the higher probability of success? We can take a look at, we're gonna mark this one. We can take a look also at the XLV, the healthcare sector. You can see that healthcare has also outperformed the S&P 500. We can take a look at the consumer discretionary semiconductors. Look at that, guys. Look at how semiconductors outperform the market like crazy, and you can see that the outperformance is really, really old. Like, it's been outperforming all the way there. So this tells you why not buy semiconductors rather than buy normal stocks. You can see that since the COVID crash, the S&P 500 went up 68%, semiconductors 127%. And when you see this kind of consolidation, why would it stop? Why would you invest there into SPY rather than semiconductors when you can be in semiconductors? And you can see that the drawdowns are here. If you invest in SPY, you're going to have the drawdowns too. But you invest in semiconductors, you're going to have the drawdown and the outperformance. So why not? And we can take a look at that on crypto, for example. You can check cryptocurrencies and you're going to see if the thing you're investing, we're going to zoom in on the daily because on crypto it's much faster. You can compare this, the DeFi index, perpetual futures. We're going to compare that to the basic, which is the alt perp. What we're doing here is we're comparing DeFi sector performance and the overall altcoin performance to see if DeFi is outperforming altcoins. If DeFi is outperforming, you'd rather be in DeFi. If DeFi is not outperforming, you'd rather be not in DeFi. This is private exchange, and we have another index, which is exchange token. And in the future, there is going to be many more indexes on crypto, and we are going to be, I'm working on building indexes, but you need to do it by hand and it's a little bit complicated. I'm trying to figure out if there is a solution. I'll update it in the future videos because I'll make multiple videos about that. But right now it's just to open your eyes into sector analysis and to decompose. We can also take a look at the European market, for example, and there you can compare you're always comparing to the reference index. So the European reference index is the STOXX 600. Oh, let me type in. There you go. This is the STOXX 600. So you can see if your asset is outperforming the STOXX 600 or not. You can see that this one is not. This one is outperforming like crazy. So the European financials have outperformed the overall markets. So you would rather have invested into that than in others. And the goal is really to check the outperforming sectors and keep investing in the outperforming sectors while they're not looking like they're gonna downperform. It's as simple as that. Yeah, really, look at that. Industrial goods and services outperformed the overall market. And you can filter the market by keeping the sectors that are performing the most, and then you can compare one sector to another to see the one that is performing the best to another, right? There's a whole new world of technical analysis opening to your eyes. So this is there's the first video. If I detail everything, it's gonna be too long. I don't know if it's interesting to you. If it's interesting to you, if you learn something, please tell me in the comments. And I really strongly believe that this is one of the key to outperforming the market. So in the future, we're gonna see how to do a sector screener. I think this is gonna be very interesting. So see you in the next video. See you on Friday. Subscribe, hit notification bells to see how to make the screener on TradingView to see which sector is the best. Thank you so much for watching. Goodbye and have a nice week.